Can Intel still matter in AI? SoftBank just invested $2 billion. Washington is signaling Intel is absolutely strategic to the AI race. So make no mistake, folks, the inference phase is big. Imagine it being absolutely massively big, and you're probably understating how big it is. Here's the positive case for Intel and what has to go right for it. So welcome to Options with Hans. I'm Hans Albrecht. I was a professional options market maker for 15 years. I ran up to 12 income ETFs for a decade after that, $1 billion managed in option strategies. And as always, this is for educational and information purposes only. Your trade, your responsibility. So if you're okay with that, let's move on. Please like and subscribe below. Grab my free ebooks that you're actually going to learn a ton from. My favorite income trading strategies with options for absolute beginners, all the way up to Volatility Ninja. Today, we are digging into Intel. What a blast from the past. We've been seeing that Cisco doing really well. That was a blast from the past, late 90s. Back then, that was the NVIDIA of that late decade. So we've seen Cisco. Let's talk about Intel. They've been around since the 60s. And they're still around, and they're actually doing a little bit better than people think, but they just needed a little encouragement, right? And so the market has been saying that it's very cheap for a reason, right? They're not very competent. There have been execution misses. They've been late to AI. It's actually been a little bit embarrassing overall. In one of the great tech runs of all time, especially in semiconductors, I mean, let's face it, it has been an unbelievable market. These guys have been like a crack dealer that just cannot figure out how to sell crack to addicted clients. It doesn't get much more incompetent than that. But it happens. Look what happened to BlackBerry when Apple came along. You can be absolutely all-powerful and something just sideswipes you. This is the world of technology. This is the world of disruption. But let's talk about it because we've got a few new catalysts. SoftBank investing $2 billion at around 23 bucks a share. We have fresh CHIPS Act funding. And a very pro-AI policy out of DC. So let's talk about how we build this positive path forward. Now, everyone thinks the AI boom kind of peaked with ChatGPT, and that's where a lot of people really have this wrong. We are entering the inference phase from the training phase, and it's going to make training look like an absolute warm-up act. This is early innings. In fact, in the inference phase, we're kind of just getting to the ballpark probably. And this is going to matter for companies like Intel that seem to not be able to do very much right, but let me tell you about what is going very right for them. So in that inference phase, we think of the old AI as the training model that is very expensive. It's very sort of heavy on jamming all this data into the AI model, building out these models, but it's a kind of a one and done. It's not totally one and done, but it's a bit more of a one and done kind of concept. Inference, on the other hand, is 24/7. It's never ending. It's embedded into everything we do. Think about it. AI, when you start using your ChatGPT, it's not just answering prompts anymore. It is now going to be thinking about it, producing a result. You're refining those gears. Think of it. Those gears are turning constantly 24/7, and they're using output to create new output, to create new output. And then in addition to that, it's going to be living inside your car, in your phone, your warehouse scanners, your medical devices. We'll talk about how that plays into Intel in a moment. So it's analyzing video feeds, supply chains, payments, workflows in real time. It is constantly running. That is the big thing. That's why it consumes massive amounts of compute and energy. So by 2030, total global data center capacity demand is projected to be about 3.5 times higher than it is right now. That demand is going to be coming from those AI workloads. Look at the workloads, right? What does this mean when we talk about workloads? Propelled by 70% of demand by workload. So if you think of computing tasks that are running inside data centers, the training, the AI models, the inference queries, the video streaming databases, those are the workloads, right? So think of workloads up to this point is really kind of being handled by a lot of non-AI tasks, right? Netflix, cloud hosting, just kind of storage, right? Like a storage facility where you stick your furniture, your items that you don't want to sell or get rid of, you just stick it in somewhere and pay for that. That's what cloud is for a lot of people. Think of how many pictures you've got sitting on Amazon photos and things like that. So cloud hosting, enterprise software, things like that. That drove demand. Now, or in the inference phase, that is going to account for a majority of the new growth. So this is really, really, really big. Okay, so let's talk about what they've got going for them. Accelerators, number one. AI power that's affordable and it's available right now. So think of these accelerators as the sort of turbo engines for AI. Intel's got this Gaudi 3 chip and they're cheaper, they're more power friendly as an alternative to NVIDIA. They're available through Dell and IBM's cloud. Companies can already test these things. They can already run them today. And Intel really pushes this idea that they can do tasks faster with less energy. I think you're going to hear less energy as being more and more important of a thing to be able to push over time as we pretty much run out of energy for AI. So, but the real edge for them really here is cost and availability. This is a supply constrained market. Intel's got the goods. Number two, CPUs. Do more with less, right? 3 racks down to 1. Basically, these are the workhorses that keep data centers running. So they're Xeon 6 processors. They're built for density, efficiency. 1 rack of this Xeon 6 can replace 3 racks of an older server. And that's going to free up space, power. You can run way more AI accelerators in the same size space, and you can lower overall costs. Now, number 3, AI PCs. AI in your pocket, right? This is going to be really, really big one day. We're not quite there yet, but this Lunar Lake chip that is really kind of all the rage a little bit as poorly as Intel has done. People are talking about this thing. It kind of puts a mini AI brain directly inside laptops, inside tablets. That means devices can run AI right on the spot. We call that on the edge, right? Instead of always relying on the cloud, it's there, it's available. You can think of things like cars need stuff like that. You can't wait for a response from the cloud. You need information right now for safety reasons. That is going to be very, very important. And when it's at the edge, it's more private, and it's very, very crucial as we build out this Internet of Things world of devices, internet and AI infused devices, sensors, and everything around us. That's going to be very, very crucial to a company like Intel. Number 4, foundry and packaging, right? This isn't packaging like putting something in a box. Intel isn't just designing chips, it's also becoming this factory for others. And that's a really, really big piece of this advanced packaging, which is kind of like, you think of it as Lego for semiconductors, right? Instead of one chip, they're kind of packaging, stacking and snapping these chips together to create a kind of super chip, very, very efficient design. That's going to boost performance. It lowers energy use and allows for mixes of CPUs and GPUs and things like that. CPUs being very, very fast, GPUs being very, very good at doing many, many things at once, and then combined with memory solutions as well. So this is really, really big. This is one of the reasons that the US is interested. It wants to foster this sort of homegrown push for an industry that's very reliant on Taiwan and other countries. That is not a good thing for something that is going to be as critical as running water and electricity. Is just going to be that important. So I think that's a very, very important thing that puts a bit of a floor in Intel from this point forward. Can it pull back a couple bucks? Absolutely, but it's so cheap. We'll talk about that in a moment as well. Next slide on valuation. Intel screens very cheap. Price to sales 1.9593 depending on where you look. Price to book of about 1. It's trading about book value. That's unbelievable. It's a fraction of a lot of AI chip companies. So the idea is that it wouldn't take very much. It's a bit like I've been talking about with Apple. They're one announcement away from something really, really good happening for them. Well, Intel is the same thing. As cheap as it is, they're not pricing in anything unreasonable at this point. It's a very, very cheap stock. And this is now starting to act as a re-rating of that stock. And then beyond that, if they execute, of course, very, very impressive. So, the revenue mix, it's already there. This is not like some speculative play. They've got cash flow. They're in everything. Go to Costco. Every computer's got Intel in it. It's unbelievable. They are out there for a company that just has not been figuring this out. And then this foundry, which means they build actual chips. NVIDIA doesn't do that. That is a very positive thing. So, gross margins pretty decent, maybe about half of what NVIDIA's are, but fantastic, fantastic stock that could really get turned around. Now, here's the real bull engine that we're talking about, this sort of re-rating moment for Intel, which is SoftBank investing a couple $2 billion via this sort of primary issuance around 23 bucks a share. That makes them a top 10 holder, right? Not that SoftBank never does anything wrong, but that's really a good boost of confidence. That's fresh capital. That's a strategic vote of confidence for a very, very prominent AI investor in the world, SoftBank. On industry policy, Intel is finalizing almost $8 billion in chips funding for US fabs, for advanced packaging, et cetera. They got another $3 billion for another separate national security program. So lots of great stuff there. And David Sachs, right? We've seen him with crypto, with everything. He is now the White House AI and crypto czar. And he is very, very smart, very aggressive. He is going to think of how to make this start to work, right? This administration has got some aggressive people in it that really want the US to succeed over time. I truly believe that. So there's going to be, think of how this is going to work out over time. There's going to be less friction for permitting, for procurement. There's going to be this AI build out where everyone's like, oh, you know, the government's going to say, hey, Intel, here you go. Want to give them a little boost, right? So these guys are being given a little bit of a push right now. And I think the push is going to get bigger and bigger. So that backdrop, very, very positive. It's policy backed. It's backed by a solid business that just needs the right people pushing it forward and guiding it. The stock is cheap. The capital is coming in now. The policy is aligned. If we ramp this Gaudi 3, this multiple has a potential to really, really move. So let's take a look at the options. Here we go. We've got Intel. It's sort of a nice long consolidation pattern, really, really cheap stock below 20 bucks there. So I think it's sort of finding a bit of a floor in there, which is going to play into our strategy in a moment. We can look at the 10-year, 20-year. So it's cheap. It's come off. It's cheap. It's book value. It's price to sales, very, very cheap. So this is a stock that has really not participated at all in the semiconductor boom, which is amazing. But with the right encouragement, I think it can have a real good shot at it. Take a look at the implied vol. Let's see if it's kind of pumped up a little bit. Sometimes you get a little bit of excitement and it pushes up. So let's get rid of, let's make this a little bit more short term just to kind of see what's happening now. I'd like to kind of zoom in and then zoom out a little bit. So you want to look at the different time frames in order to give you the right idea of where the sort of sentiment is at the different parts of the expiry, right? Along the term structure here. You want to know where are things. You can see right here on the term structure that the options get cheaper and cheaper and cheaper. That doesn't mean they're notionally cheaper, it just means they're cheaper on an implied volatility basis, right? So they're charging you less and less and less as you go out. You don't always see that, but this is, you know, fairly normal. And so if you take out the percentile and rank, you can see that it's popped up. So this is what's happened here since the news came out. It went boom. And so they're sort of starting to price in, you know, over here, they're pricing in this company's incompetent and it's not going anywhere. Over here, they're pricing in, oh, something's going on again. You can see sort of, it's almost acting like almost like an Ethereum or something like that, where if the stock rallies, then they start to assign some risk premium to it. If it comes off, they kind of give up on it again. It's like, oh, okay, it's back in the basement. And then it starts to run up again. It's almost like a gold or you know, MSTR. It's kind of funny that way. So this is sort of a weird some weird action here now. So that looks actually good. If you want to do maybe like a leap and maybe a short-term call, you're taking a risk. And anybody who's watched me knows that I'm not a huge fan of doing that. If you want to be long something, get some leaps, get whatever it is you need, and don't get in your own way until you really, really feel compelled that there's a good opportunity for that. So if I look at the 360-day vol, so that's 1 year vol, 1 year, when I say vol, I just mean option pricing, you can see that that's pumped up a little bit too. So it's only 4 points, but in the world of 1 year options, that's a pretty reasonable move. So it's basically come out of the basement here where it was early August, late July. A lot of option charts look like this, and we've popped up a little bit again. But I'd say that it's not really extraordinarily expensive. So if I wanted to go maybe to something like an 80 delta to give me a little bit more of a stock replacement type strategy, it's really not very expensive. You just look at that 80 delta vol. as accurate as we can expect this to be, is actually pretty cheap, right? So that 80 delta, which is basically picking up the put skew on the opposite side of the ledger, is not really expensive at all. So I really like that about that play. And then if you wanted to look at something like a little bit more of an explosion type trade, we have both in our Leaps Trader program: explosion trades, core trades, core AI trades, the sort of Leaps AI basket. So lots of really cool stuff. Incredible closes over the last few weeks. We actually nailed the top on Palantir. It was kind of scary, as well as Ethereum the other day. So here we go, up here, coming back down. So if we look at, say, like a 40 delta is probably more like an explosion trade, maybe even like a 35 delta. You can see that thus far, they've started to price in a little bit of excitement in that upside call skew. But it is coming back low. So I expect if this thing sort of settles for a bit, because we're probably not going to get too much more news for a little bit, we'll probably get this down to maybe 45, 45-ish, 44.5, 45-ish on the implied vol level, out to the 360-day vol on the 35 delta. I think that's going to give you a very, very nice entry point, where I would say definitely it's not pricing in what could happen to the stock. This stock could re-rate higher at this point, because it's just going to probably have relatively good headline risk. Now, let's take a look at some of the options. Hi. I'm just making a video. Okay. Now, so what I did today is I went out to the September 2026 expiry, and I looked for something that might give me just a little bit of oomph here, right? So I picked up some of these SEP22 calls for a little bit higher here, 710. And so that gives me, we've got a little bit of time value in there. There's no question. This is not something you want to do if you think that we might be kind of spinning our wheels for 6 months. So this is where we think, in my view, I think we either have some sort of something breaks and we have a market sell-off, or what's much more likely in my mind is that we have a very, very solid market melt-up into the end of the year. Really, really quite an impressive one that will continue for some time. So that's kind of my view, is that you can position yourself in ways that kind of play the market almost like a straddle, like a long straddle, where you don't have to put, you can position yourself in something a little bit less risky in a way that has a bit of time value, but that's going to involve, you don't have to buy as much protection, right? Because it already has protection. And in the money, call is basically like a long stock with a put, right? So these are sort of the same things synthetically. So you've got a trade that has embedded protection in it, as well as nice long vega. So if option volatility explodes, you're going to get a little bit of a benefit from that. And then you can pick up, you don't need as much protection. So in some of my portfolios lately, I'm actually sort of picking up teenies, really, really cheap out of the money puts, but kind of sizing up, right? To give myself that really, really steep convexity that I want in the event of a massive sell-off. But again, that's not my base case. But I think we are going into a world of incredible disruption and unknowns. And we don't know how the market is going to take this. And that's why I think some of these longer term vols are actually kind of cheap. So longer term options are cheap, as well as upside skew not being extremely. This is up a little bit, I think, because Intel now is sort of in play again. If you look across MAG and some other names, they're not really pricing a whole lot of movement to the upside. So I think there's some interesting opportunities, and I think option prices have the potential to really, really pick up in the next year or so. I think we're just not going into a quiet period, quite the opposite. And I think some things may be a little bit mispriced. So you can take advantage of things like that if you join the Leaps Trader program. We've had unbelievable wins. You can see in the portfolios here, a lot of nice closes, 30%, 258%, 139%, 117, 85, 294, 65, 93, 67. This one's up 73, 49, down a little bit here. So some really amazing results. That's why people are joining like crazy. They're just seeing some amazing stuff. It's not to say that we're always going to be right, but you have to have the right approach, and you've got to understand risk and reward and position properly. So 143%, this is the other one. This is our Hedge Leaps Trader AI. In this one, we have a number of hedges on in positions over here, which are working out well. We actually have some free protection in Amazon, the way that we played it, which was really cool from an income trade. Some sensibility about how sentiment works and volatility and when to zig and when to zag. And I think that's really missing in the industry. That's it. I hope you guys enjoyed that, and we shall see you in the next video.